Maybe if you compare those costs with some other decisions, these become irrelevant. So the question here, that argument that costs are relevant in one decision situation may not be relevant in other contexts, right? So it means your scenario completely changed if the decision is something else. If you are basing your decision with only based on comfort, then you will choose train. If your decision is based on, commuting, commuting and benefits of, what's going on here? Commuting and, let me clear this map. Wow. Okay, let's see that here. Let me remove a mess here. So if your decision is based on benefits of having car in New York, then your decision is totally changed, right? So that's why this argument was, holds true when we talk about that the cost that is relevant in one situation may not be relevant in other situation. That's why we are using relevant cost while making decisions, right? Let's move forward. So which costs and benefits are relevant in Cynthia's decisions? So let's just repeat that one. We already discussed in detail. So the cost of the car is sunk cost, right? And is not relevant. Whether she go by train or by own car, she already paid the price of the car, right? Annual insurance is not the relevant, right? Because in both cases, these are unavoidable, because whether she go by train or not, she already paid the insurance, whole year insurance, right? So it remains the same if she drives or take train. However, the cost of gasoline is clearly relevant. She can save the gasoline cost, right? If she chooses to go by train, right? The cost of maintenance and repair is relevant. The more she drives, the more there is a repairment and changing of oil and all those stuff, brake oil, engine oil, right? So those costs are relevant, clearly relevant. The monthly school parking fees. This is monthly school for parking fees. Maybe she is visiting over there for 2 days, or maybe 1 day or 3 days, but she already paid monthly parking fees in school. So whether she go by train or not, she already paid that. It is sunk cost. So at this point, we can see some of the average cost in this 0.619 are relevant and others are not. We already talked about that. Similarly, the decline in the value of additional mile is relevant. We talked about that. Round trip is also a round trip of the train fare is also relevant. The relaxing is also relevant, right? Because it is difficult to assign dollar value for the benefits. Even if there are dollar values, still it is relevant. The kennel cost is not relevant. Why? Because she's going out. Whether she go by train or by her own car, she still need to pay this $40 for kennel services. The cost of parking in New York is clearly relevant because these are in addition of the fare, right? Plus the benefits of having car in New York and the problem of finding parking space are also relevant, although it is difficult to assign the value. Even if they assign the value, even then it is relevant. So now if you multiply the round trip, so our friend is 230 miles apart, so round trip gonna be 4 60. So gasoline prices, yes. Maintenance, yes. Reduction in resale, yes. Parking fees, right? Parking fees in New York, yes. So her total fare gonna be $137.86. Train fare is $104. So which one she should choose? Which one she should choose? One or two? Good. Ali replied me, Coco and Subhan, your participation is missing because we are talking about the cost. So we are saving cost, right? We are saving costs. So we want to pay less costs, so we will be taking train. If these are the sales benefits, then of course we will be choosing greater benefits. So that's why the scene changes. So we can same apply this to our business as well, because this is managerial accounting, and managerial accounting makes sense in factory situations, in manufacturing situations. So how we can use this differential or relevant or irrelevant stuff in business settings? So here we go. We have an income statement, and the scenario is that the management of a company is considering a new labor saving machine that rents for 3,000 per day, per year. Data about the company's annual sales and cost with and without the new machine are below. So this is the current situation in which they are earning net operating income 18,000, and in new situation they are earning net operating income of 30,000. So can we say that this is good or bad? We should adopt this machine or not? Let's talk about it on relevant or irrelevant stuff. So those costs which are unavoidable, we remove that one, or irrelevant costs. So if you see the differential cost here, sale is not increased, whether you purchase this machinery or not, sale is the same. So that's why 0 here. Your direct material is the same, 0 here. You will be saving this direct labor cost. How much? You says now direct labor cost will be 25,000, right? 25,000, right? So you will be saving 15,000 here, and rest of the stuff are the same. So variable expense doesn't same. So our total variable expenses contribution margin is saved by 15,000. Okay. What are the other costs? Fixed expenses remain the same, except we now have to pay fixed rent expense of 3,000. Right? So 3,000 is a new cost that would be added. So what is the benefit of having this new machine? That you are saving labor cost 15,000 and only replacing it with 3,000 per year rent, and due to that one you are having increased in your profit 12,000. So answer is clear. This is the positive side, positive number. It means you should accept this offer, right? So this is how you analyze based on relevant and irrelevant costs or differential cost, right? So net advantage is not because of your sale have increased, your sale is not increased, right? Look at here. It's just the saving of your cost. So cost is saving, it means your profit is going to increase, right? So total and differential cost approach. So using differential cost approach is desirable for two reasons. Number one, only rarely will enough information be available to prepare detailed income statement. So that's why we are going towards differential cost. Right? We are just given the information. Okay, we are purchasing this new machinery and we have to pay 3,000 rent yearly and we are saving 15,000. How much is the income? So you just say that your previous income is 12,000. Okay. Sorry, 18,000, and now income increase, saving is 12,000. Okay, 30,000 increase because you don't have the other information, only profit. So by saving, you add the saving of the new machine to the previous profit, that will be your new profit, right? Second one, the mingling irrelevant cost with relevant may cause confusion and distract attention away from information that is really critical. The critical information here is just these two. Rather, we focusing here on 200,000 minus 200,000, right? 70,000 minus 70,000, 10,000 minus 10,000, 62,000 minus 62,000. Rather wasting time here, which looks very confusing, just go to the relevant part. Which two costs are relevant? Labor cost, how much saving in the labor cost, and how much we are paying for the machine rent. So this 12,000 added to our previous situation, you find out the total profit that is we will be having after installing this new machinery, right? So if you understand all this stuff, so I'm just setting up a breakout room activity. So please take a picture and solve this case 1 and case 2. So you will find out that in case 1, some costs are relevant, or those costs whose are relevant in case 1 may not be relevant in case 2. You will understand here that argument, okay? So please take a picture. And meanwhile, I'm setting up the breakout room. So those who are watching online, please pause the video, and I'm resuming the video after this breakout room activity, okay? Those who are watching, please stop the video and try to solve this question by yourself.
Yes.
Okay, class, welcome back after the breakout room activity. So we were doing this class exercise, page 604, 605. So let me read that, and then we will be seeing and comparing your answers. So a number of costs are listed below, may be relevant in decision by the management of 7 AB and Swedish manufacturing of sailing yachts. So copy the information above onto your answer sheet. Okay, case 1, case 2. Number 1, the company chronically has no idle capacity. An old machine, B100 machine, is the company's constraint. Management is considering purchasing a model B300 machine to use in addition to the company's present model B100. So two models are going to use B100 and B300. The old machine will continue to be used in as capacity as before, and it is on 100% capacity because it has no idle capacity, right? But with the new machine, which is used for expand the production, so this will increase the company production and sales. The increased volume will be large enough to require increases in fixed selling expenses, in general and administrative expenses, but not the fixed manufacturing overhead. Number 2, case 2 is that the old B